As you know, I have developed a trading algorithm. The algorithm is now live, and the pilot is about to start on our Discord server, and it's just waiting for it to take its first trade. So pilot hasn't really started, but uh, while we are in holding pattern, I'm going to start making these videos going through the last 5 or 6 years of backtests. All the backtests, by the way, are linked below in the description, and walk you through what the algorithm thinks and how it makes its trading decisions so that it's transparent and clear to you what exactly are you getting when you start seeing those trade alerts on Discord. So I'll start this series with 2024, which is this year. And this year is very easy. It's just an uptrending market with couple of minor corrections in between. You notice I've added some more indicators. So I have the EMAs here. I have my regular DMI, ADX, RSI, and I also have MACD. If you remember, in one of my videos I've mentioned that for a human being looking at a chart, all we have to do is just look at the chart and everything just makes sense to us. For a computer dealing with random data points, it doesn't have that capability of visualizing something. So I have to teach it to see the charts in a certain way. So I had to use several indicators. So if you remember, in my book I've mentioned keep things simple, the KISS principle, right? Keep it stupid simple. The thing is, for human beings, if you add a lot of indicators, it starts confusing you. So the best way to trade manually is narrow your indicators down to a small list and just use those. For computers, it's different. You can add like 50 indicators and the computer doesn't get confused. For it, one indicator is the same as 50 indicators. So to improve accuracy, I had to introduce several indicators, and I've gone through that in my previous video. I had to use MACD because MACD really helps the algo understand the markets. And then I've done many other things like linear regression. I've mentioned that in the past. I also use multiple time frame analysis when trying to gauge the health of the market. I use advanced decline lines and many other things. Anyway, so that's not the point, but you will see that there is one more indicator on this chart that I'm showing you, and we'll start going through the trades now. So the year is not over, so it has taken only 126 trades, which comes out to 2 trades per week. Remember, my goal is for the algo to generate between 5 to 6 trades per week. That gives me a large or decent size data set to generate these statistics from. Okay, so I mean, this year you can see 85% win rate. Again, take it with a grain of salt because the year is not over yet, and the number of trades are not um, enough. Once this goes to like 300-400 trades, this number will drop. It will drop, let's say it drops to 78%, which is amazing. Like in good years, if I can get 75% or 70%, in bad years, if I can get even 50% win rate, this algorithm is doing what it's supposed to. Okay, so 85% win rate so far, that would equate to $4,500 in losses and 50,700 in gains so far. Okay, and this test stops in September, so it's from January 1st to September 15th, I would say. And as you can see, the ETF performance, every ETF has more winners than losers, and it's actually significant. That's why we have the high win rate, because look at IVV, 30 winners, 1 loser. SPY, 34 winners, 1 loser. So the reason I'm showing you all this is, first of all, keep these numbers in mind, and also to point out as we go through the trades that the algorithm, the way I've designed it, is it's very patient. It waits for the right setups. It's not trading like crazy on every day. So the algorithm wakes up every hour of the day and looks for market conditions and looks for trades, but that doesn't mean that it's taking trades every hour. So it's very patient, waits for the right setups, and that is why you have so many winners. So having said that, let's start looking at the individual trades. So if you notice, there are some numbers, this column date opened. I've gone through this in the past, how this sheet is laid out. It's very simple. You have symbol, long strike, short strike, trade type, call spread or put spread. Those are the only two trades I take. Expiration. You will notice that in the date open column, sometimes you will see red dates. What that means is the algorithm went into wait and watch mode during those periods. I mean, these, once you go through these back tests, you will see that if the algorithm doesn't find the right conditions, it may even go into wait mode for like 30, 40 days. It doesn't take any trades. And it doesn't have to, because when the right trade setup shows up, it does start taking trades. So that is the key to success, to waiting for the right moment. So I'll go through these red dates, why it went into wait mode, and talk about that. So let's start with the first trade. First trade was taken on 123. Now, for a human looking at this chart, it should be very obvious to you that the markets have been trending since the beginning of the year. So why did the algorithm not take any trades for 23 days? Well, it's because of the rules that I have coded into the algorithm. Um, the algo doesn't see a chart like I or you do. When we look at the chart, it just immediately makes sense to us. For the algo, it's just a bunch of random data points. So I have to train it to understand what's going on. And I have certain breaks built into the algo so it stops trading under certain conditions. So in this particular case, until January 23, until January 23rd, the conditions were the markets were getting into overbought area. The RSI, if you look at the RSI, it keeps going into overbought. So whenever RSI goes into overbought, the algo stops trading. Another thing it does is it uses MACD. So if the blue line, the MACD line, is below the signal line, it stops trading. The blue line needs to be above the signal line for it to consider it a healthy trend. So in this particular case, the blue line did drop from January 1st all the way to January 23rd, which caused the algo to stop trading. So basically it's doing what it's supposed to. That's good. After 123, just took two trades on 123. So it again goes into wait mode until 27. So why was that? If you look at the MACD line is above the signal line, but look at RSI. RSI is constantly getting into overbought zone. So that is the reason why it's not taking any trades during that time. So on 2/7, I think for one day, RSI dropped below oversold, overbought, and that's why I took all those trades on 2/7 and then it stops. So the next trade comes on 226. So let's look at that. 226 and 227, it took just few trades and then it stops again. And the conditions are again, if RSI is getting into overbought zone, and if you look at the MACD line, there is no clear trend. So the signal line and MACD line are basically overlapping. So that's why it's not taking any trades until 226. It takes some trades on 226, some on 227, and then again skips trading completely. This is a significant gap here until March 25th. So imagine if you had taken some trades here, right? My trades, if you remember, call spreads last for 30 days. So 220, let's say you took a trade on 311. There is a minor correction coming up, and that would have meant any trades taken from this point onwards would have lost if the expiration overlaps with this area. So in a way, The algorithm is doing a good job because when it detects that the conditions are not perfect, it doesn't indulge in trading. And when in this case, it's getting mixed signals. RSI is constantly getting into overbought. MACD is not generating a reliable signal, so it just doesn't do anything. And so in this case, it actually turned out pretty good. Yes, in the beginning of the year, it missed out some opportunities, but it also did not lose any money until this time. So once this correction is over, and then the next round of trades really comes on 5-7. So this is another huge gap. So this is almost like a 1.5 month gap. So it did, if you remember how the algorithm works, if it detects a bull market, first it has to detect a bull market or bear market. If it's a bull market, when markets go into a pullback, it stops trading and waits for the recovery to happen. And in this particular case, the recovery actually started happening exactly on 5-7. Market started turning around. And now it starts, now if you look at the list, it starts taking a bunch of trades at that point. And that is the moment where you are waiting for that setup to show up. And when the setup shows up, then you start trading. Look at the number of trades it's taking: 5-7, 5-8, 5-9, 5-10, 5-14. It's just constantly trading as the markets are going up. And then it takes the trades until 5-16, until this point, when markets again become overbought as shown by RSI. And then it skips trading until 6-7 again. And the next trade really comes 2 months later. So another interesting point here is, if you ignore this future part, so let me just zoom it. So Algo starts buying here, keeps buying until this point, and stops trading here. So at this point, we don't know what's coming in the future. So that's why you can look at a chart and then start questioning the algorithm, that why did you not participate in that trend? Because if you keep going forward, yes, markets went up for some time, but there is a big correction coming up. So the algo getting cautious when RSI is overbought and MACD and a few other indicators are not giving it the confirmation it's looking for, it just stops trading. And I think that's perfectly fine, because when it does start trading again, then it finds good quality setups and it makes good money. So 2 months doesn't take any trades. So let's zoom out again. So 612 is somewhere over here. It stops trading here. It does miss out on some of the trade opportunities. It also completely skips this correction because it doesn't lose any money here. So the next trade is 815. When the market starts recovering, it starts taking some trades here. And then you can see when markets do recover, it takes a bunch of trades: 815, 816, 819, 820. It's just constantly taking trades. Stops on 828 again, which is somewhere over here when the markets are again about to go into a, this is the pullback. It's not a proper correction, but it's significant enough that any trades taken before that, falling on that expiration, will become 100% losers. So it stops here again, starts trading on 916, which is here, and then just keeps checking. If you look at this, just constantly trading until 920, which is when this back test stops. So hope that gives you an overview of what the algorithm is looking for, why is it so patient, and why is being patient and not over trading. As traders, most of us feel compelled that we need to constantly take trades every day, otherwise we are not doing our job. The problem is that sometimes the right trade setups just don't show up, and all that means is you just don't do anything, just go about your life. You don't have to be stuck to the computer. And this is a great example of that you saw how many times the algo just completely skipped trading, and then when it does start taking trade, it takes a lot of trades and all of them become winners. That's all I have for you in this backtest. The next backtest video I will publish is for 2023, which will have a lot more trades. So there were 257 trades taken for 2023. So that will be more interesting than this, and the data will be more reliable. So stay tuned, and I'll see you in the next video.